Job order costing systems are used when 1. Many different products are produced each period, 2. Products are manufactured to order, 3. The unique nature of each order requires tracing or allocating costs to each job and maintaining cost records for each job. Examples of companies that would use job order costing include Boeing, Bechtel International, and Walt Disney Studios. Boeing is an aircraft manufacturer. Bechtel is perhaps the largest international construction company. Walt Disney Studios produces movies. In a job order costing system, direct materials and direct labor costs are charged to each job as the work is performed. Manufacturing overhead, including indirect materials and indirect labor, are allocated to all jobs rather than directly traced to each job. The job cost sheet is used by the accounting department to track the direct and indirect costs associated with a given job. A job number uniquely identifies each job. Direct material, direct labor, and manufacturing overhead costs are accumulated for each job. A materials requisition form specifies the type, quantity, and total cost of materials needed for a job. Requisition number X76890 details the $116 of material required for job number A143. Once the materials have been issued by the storeroom, they are recorded on the job cost sheet. Notice the material requisition number X76890 is also recorded in case there is a need to refer back to the source document. Employees use time tickets to record the amount of time spent on each job. A completed time ticket is an hour-by-hour summary of the employee's activities throughout the day. Here is the time ticket for an employee who worked 8 hours on job A143. The employee's hourly pay rate is $15. So the total labor cost charged to the job will be $120. The time ticket, number 36, serves as the source document for labor costs charged to this job. The accounting department records the labor costs from each time ticket onto the job cost sheet. Time ticket number 36 posted 8 hours to job A143. The total amount of direct labor cost is $120. Learning objective number 1 is to compute a predetermined overhead rate. An allocation base, such as direct labor hours, direct labor dollars, or machine hours, is used to assign manufacturing overhead to products. We use an allocation base because A. It is impossible or difficult to trace overhead costs to particular jobs. B. Manufacturing overhead consists of many different items, ranging from the grease used in machines to the production manager's salary. C. Many types of manufacturing overhead costs are fixed even though output fluctuates during the period. The predetermined overhead rate used to apply overhead to jobs is determined before the period begins. It is calculated by dividing the estimated total manufacturing overhead cost for the coming period by the estimated total units of the allocation base for the coming period. Ideally, the allocation base is a cost driver that causes overhead. Predetermined overhead rates that rely upon estimated data are often used because 1. Actual overhead costs for the period are not known until the end of the period, thus inhibiting the ability to estimate job costs during the period. 2. Actual overhead costs can fluctuate seasonally, thus misleading decision-makers. The predetermined overhead rate is computed before the period begins using a 4-step process. 1. Estimate the total amount of the allocation base, the denominator, that will be required for next period's estimated level of production. 2. Estimate the total fixed manufacturing overhead cost for the coming period and the variable manufacturing overhead cost per unit of the allocation base. 3. Use the following equation to estimate the total amount of manufacturing overhead. Y equals A plus BX, where Y equals the estimated total manufacturing overhead cost, A equals the estimated total fixed manufacturing overhead cost, B equals the estimated variable manufacturing overhead cost per unit of the allocation base, X equals the estimated total amount of the allocation base. 4. Compute the predetermined overhead rate. Learning objective number 2 is to apply overhead cost to jobs using a predetermined overhead rate. Pearco estimates that it will require 160,000 direct labor hours to meet the coming period's estimated production level. In addition, the company estimates total fixed manufacturing overhead at $200,000 and variable manufacturing overhead costs of $2.75 per direct labor hour. Y equals A plus BX. Y equals $200,000 plus $2.75 per direct labor hour times 160,000 direct labor hours. Y equals $200,000 plus $440,000. Y equals $640,000. $640,000 estimated total manufacturing overhead divided by the 160,000 total estimated direct labor hours equals a predetermined overhead rate of $4 per direct labor hour. Recall an employee worked a total of 8 hours on job A143. The predetermined overhead rate is $4 per direct labor hour, so $32, 8 hours times $4 per direct labor hour, of overhead is applied to this job. Learning objective number 3 is to compute the total cost and the unit product cost of a job using a plant-wide predetermined overhead rate. The total direct material, direct labor, and manufacturing overhead costs assigned to job A143 is $268. Since this job included 2 units of production, the unit product cost is $268 divided by 2, or $134. Job WR53 at NW Fab Incorporated required $200 of direct materials and 10 direct labor hours at $15 per hour. Estimated total overhead for the year was $760,000, and estimated direct labor hours were 20,000. Would the recorded cost of job WR53 be $200, $350, $380, or $730? The predetermined overhead rate is $38 per direct labor hour. The direct materials cost is $200. Since 10 hours was worked on the job, the direct labor cost is $150, $15 hourly rate times 10 hours, and a total of $380, $38 per direct labor hour times 10 hours worked, of manufacturing overhead is applied for a total cost of $730. Predetermined overhead rate, $38 per direct labor hour. Direct materials cost, $200. Direct labor cost, $150. $15 hourly rate times 10 hours. Manufacturing overhead, $380. $38 per direct labor hour times 10 hours worked. Total cost, $730. Inaccurately assigning manufacturing costs to jobs adversely influences planning and decisions made by managers. 1. Job order costing systems can accurately trace direct materials and direct labor costs to jobs. 2. Job order costing systems often fail to accurately allocate the manufacturing overhead costs used during the production process to their respective jobs. Job order costing systems often use allocation bases that do not reflect how jobs actually use overhead resources. The allocation base and the predetermined overhead rate must drive the overhead cost to improve job cost accuracy. A cost driver is a factor that causes overhead costs. Many companies use a single predetermined plant-wide overhead rate to allocate all manufacturing overhead costs to jobs based on their usage of direct labor hours. 1. It is often overly simplistic and incorrect to assume that direct labor hours is a company's only manufacturing overhead cost driver. 2. If more than one overhead cost driver can be identified, job cost accuracy is improved by using multiple predetermined overhead rates. Learning objective 4 is to compute the total cost and the unit product cost of a job using multiple predetermined overhead rates. Dixon Company has 2 production departments, milling and assembly. The company uses a job order costing system and computes a predetermined overhead rate in each production department. The predetermined overhead rate in the milling department is based on machine hours, and in the assembly department it is based on direct labor hours. The company uses cost-plus pricing and a markup percentage of 75% of total manufacturing cost to establish selling prices for all of its jobs. Company estimates at the beginning of the year are as shown. During the current month, the company started and completed Job 407. It wants to use its predetermined departmental overhead cost and rate for the milling and assembly departments. Milling department equals $390,000 plus $2 per MH times 60,000 MHs equals $510,000. Assembly department equals $500,000 plus $3.75 per DLH times 80,000 DLHs equals $800,000. Use the amounts determined on the previous slide to calculate the predetermined overhead rate of each department. Milling department equals $510,000 divided by 60,000 MHs, or $8.50 per MH. Assembly department equals $800,000 divided by 80,000 DLHs, or $10 per DLH. Use the POR calculated on the previous slide to determine the overhead applied from both departments to Job 407. Milling department equals 90 MHs times $8.50 per MH, or $765. Assembly department equals 20 DLHs times $10 per DLH, or $200. We can use the information given to calculate the amount of the total cost of Job 407. Here is the calculation of the total cost of $2,485. The selling price of Job 407, assuming a 75% markup, is $4,348.75. It is important to emphasize that using a departmental approach to overhead application results in a different selling price for Job 407 than would have been derived using a plant-wide overhead rate based on either direct labor hours or machine hours. The appeal of using predetermined departmental overhead rates is that they presumably provide a more accurate accounting of the costs caused by jobs, which in turn should enhance management, planning, and decision-making. When a company creates overhead rates based on the activities that it performs, it is employing an approach called activity-based costing. Activity-based costing is an alternative approach to developing multiple predetermined overhead rates. Managers use activity-based costing systems to more accurately measure the demands that jobs, products, customers, and other cost objects make on overhead resources. The amount of overhead applied to all jobs during a period will differ from the actual amount of overhead costs incurred during the period. 1. When a company applies less overhead to production than it actually incurs, it creates what is known as underapplied overhead. 2. When it applies more overhead to production than it actually incurs, it results in overapplied overhead. The cost of goods sold reported on a company's income statement must be adjusted to reflect underapplied or overapplied overhead. 1. The adjustment for underapplied overhead increases cost of goods sold and decreases net operating income. 2. The adjustment for overapplied overhead decreases cost of goods sold and increases net operating income. All of a company's job cost sheets collectively form a subsidiary ledger. The job costs sheets provide an underlying set of financial records that explain what specific jobs comprise the amounts reported in work in process and finished goods on the balance sheet. The combined costs of the jobs still in process are included as work in process on the balance sheet. Likewise, the combined costs of the completed but not yet sold jobs are included as finished goods on the balance sheet. The job costs sheets provide an underlying set of financial records that explain what specific jobs comprise the amounts reported in cost of goods sold on the income statement. The combined costs of the jobs completed and sold are included as cost of goods sold on the income statement. Although our attention is focused upon manufacturing applications, it bears re-emphasizing that job order costing is also used in service industries. Job order costing is used in many different types of service companies, for example, law firms, accounting firms, and medical treatment. End of Chapter 2.